All right, what's going on, guys? So in the first video, we're gonna go straight into the what method do we trade? And because a lot of people, that's obviously the first thing you're gonna ask. And it's we trade supply and demand. Many methods work, but supply and demand has proven to be a universal strategy that has solid odds of staying consistent and providing people results. And that's not to say other methods don't work. Just like I said in the previous video, the very first one, there are many methods that work, but for what we're going to be going over in this, we're going to go over supply and demand, and that is simply because of statistics and probability. If you know anything about trading, the key thing to making a successful trader is risk management and consistency and being okay with taking a loss. And when I look at the proper risk management, say you're going for a 1 to 2 ratio, meaning you're willing to risk 1% to make 2% or 0.5% to make 1%, you have to get to a place of knowing that you're okay with losing that, and knowing that if you stick to the rules that we go over in the following videos, that you'll statistically come out on top. Meaning there are going to be some days you guys have a losing week and you're going to be like, nothing's working. But there's going to be another week where if you have used proper risk management that losing week before, you can win the next 4 or 5 trades, and you're going to get not only the money that you went into drawdown on or lost, you're going to make that back times two because you have proper risk management. You're going for risk reward. It's about taking, it's like you're flipping a quarter. Honestly, I think if you can be 50% correct on the trades that you have taken, then I mean, you're going to be profitable over time because you're not going to consistently lose unless you start breaking rules. And that's what we're going to go over here is we're going to go over the rules as we progress through the other videos. But let's go a little bit further. Let's take a look. So what is supply and demand? I promise you guys, this is literally the longest slide that I'm gonna do in this entire thing, right? So just bear with me, read this, let's take a look at it, and then I'll kind of go into a little bit more detail. But supply refers to the quantity of a good or service that producers are willing to sell at a given price, while demand refers to the quantity of that good or service that consumers are willing to buy at a given price, right? So this is just a little tiny breakdown of the fractalization of supply and demand, right? How it's used in the macroeconomics, and then how we utilize it inside of Forex, because it's universal, it doesn't change. But you got it. So if you have a lot of supply, the price of a good might be cheaper. If there is low supply but high demand, that price of that good might be more expensive, depending on who's selling it and who's buying it. But when supply exceeds demand, prices tend to decrease because producers need to lower prices to sell their excess inventory, right? It's where you get your buy one, get one, 50% off. You have Black Friday, right? Christmas time, that certain people start to come up with these sales, right? It's because they might either just trying to get people involved with their business and they want first-time customers, or they literally just have too much inventory and they need to sell it. Otherwise, they're going to have overstock and they can't do anything with it, right? Conversely, when demand exceeds supply, prices tend to increase because consumers are willing to pay more to obtain the scarce goods. Now, think of something that might be rare. There might be something in the world, maybe sports, baseball, signed by certain players on in the league. Maybe there's a trophy. Maybe there's um, a card. Look, think of anything collectible, one of 100. A lot of cars, there are cars out there that are only a few made, and they're super rare, but because of how super rare and how valuable they've become in that rarity or scarcity, if you will, their prices increase because people want to have that vehicle. So if in order to buy the super small supply of it, you have to pay an increasingly big price. That's just common sense. So, understanding supply and demand dynamics is crucial in trading because it helps traders anticipate price movements. For example, if a trader predicts that a demand for a particular stock will increase, perhaps due to positive news about the company, they said company, but the company, they might buy the stock before the price goes up. Therefore, they get in, right? So they found out, they did their research, they bought it at the stock when it was at $1, and after that day or the next 2 days, it shot up to $5. And depending on how much money they had, they got a solid return. Similarly, if a trader anticipates that supply of a commodity will decrease, perhaps due to geopolitical tensions affecting production, and countries can't, China's not selling to America, or America's not selling to China, whatever it is, they might buy the commodity before the price is raised. Therefore, you have something that's super rare and the demand's going to go up for it. Therefore, you can raise the prices of whatever product you buy or stock, whatever it is. By analyzing supply and demand factors, traders can make informed decisions about when to buy or sell assets, maximizing their potential for profit. It's a powerful strategy because it's based on fundamental principles that drive market movements. Now, I don't know if you can't read that. I don't know why it's all like doing that, but the point is this works in all of them. And on the right here, you see there's currency. So for you Forex traders out there, you have crypto, you have stocks, you have commodities like gold, silver, cotton, water, soybeans, right? Indices, you have futures, etc. You have so many different variations of it. And all of these markets all have one thing in common, and it's supply and demand. And depending on like the exchange rate of the currencies, depending on how many people are using crypto, depending on how many people are buying stocks, depending on how many people are holding on to precious metals or getting into the indices and futures market and they're just day trading and they're buying contracts and they're selling those contracts back to the broker or to whatever entity is holding those futures, right? It's always a specific principle of identifying when buyers or sellers are in the market. And if you can find out where those buyers and sellers are located, you have a pretty good idea of where you want to be taking either your sells on a supply or buying within a demand when prices are rallying and people are trying to get in the market and drive momentum to the upside. There's so many variables, but at the same time, it is universal throughout all of these markets. So if you're in Iconomy right now and you're watching this and you're like, oh, I'm a crypto trader. I don't trade currencies or stocks or commodities or anything. I just focus on cryptos. This will work for you. If you're just a currency trader, it'll work. Stocks, anything, right? So simple. And then we have the last slide here. How do we use supply and demand in trading? In short, supply and demand show us key zones that price will ultimately come back to retest, right? I like to look at it like this. Like it's a pair of magnets. Price is more magnetized to come back to certain areas of supply and demand that follow certain rules. Rules that if followed produce abundant results. Now, when I think of a magnet, like I like to draw, maybe you have like a negative and then you have a positive. Those two connect, right? But let's just say you have a bearish market, right? And the bear market leaves a nice big area of supply right here. Well, depending on where the overall market value is and how the structure of the market is, maybe this is a nice downtrend and it's pushed so far. Well, here's a little tip. The market can only push so far for so long before they have to come back and mitigate liquidity, come back and offset the sellers if they're in a bullish trend and offset the buyers if they're in a bearish trend, right? So they have to constantly go back and forth and mitigate these prices. So they push price back up and then they push it back down a little bit further. And there's a lot of emotional attachment to here. There's a lot of psychological aspects. A lot of people kind of get messed up in the zone. You got breakout traders, you have instant reversal traders. Maybe they stop hunt low and then they go higher and then they drop again. There's variables that I'm going to be going over as we continue to do it. But let me clear this. Hopefully that made sense for you guys. But rules that I plan on breaking down in a way that will allow even the newest trader to start seeing results within 90 days, right? So if you stick to this and you ask questions, this is the big thing, right? Don't just sit here, watch the video and think that you have it down. There is going to be changes in the market every single day. There are times when I'm looking at my method and there's literally no trade for the week and nothing lines up. And you just have to be disciplined to not take the trade. If there's one thing I can share with you from personal experience, and I'm sure if anybody here is an experienced trader, or even if you're not, it doesn't matter. The point I'm trying to make, the thing that I've learned is patience is a massive virtue. The most successful traders in the world are the ones that are taking their time and utilize the freedom that Forex gives them to go do what they love, so that all they have to do is be like, you know what? I got on the market this morning. There's nothing there. You know, I don't see the right thing that I'm looking for. So guess what? I'm not trading. And having that discipline to not trade in a world where everybody is needing money right now because of inflation, because of the economy, because of all this stuff going on, right? That's a whole nother discussion in itself. But the point is that we are looking to make money, and how can we walk away from the market when we can make money today? It's like, I mean, you could if you're a scalper, but even then, you still got to have discipline. You still have to follow your rules. And if you don't follow your rules and you stick to the risk management, you will lose your money over and over and over. Even if you get lucky one time and have a big payout, if you didn't have a set of rules that helped you get to that, you're guaranteed to lose that money. We're not, this is gambling if you don't have a set of rules, right? If you do it right and you watch the videos and you take it and you do it over and over again and you ask questions, you get involved with the group, you're going to start noticing things happening in the market and in your own self that are going to make you a better person, not just a better trader, but you're going to take the principles that we go over within here to help you set up disciplines in your actual life that are going to make you a better person and have you seeing results in all assets, your relationships, your friendships, your health, your daily routines, anything that you got going on, right? All of those get better by default. So believe that was the last slide for this section. Yep. So I will see you guys in the next training and keep getting excited. I'll see you in the next video.